Hello, everyone, and welcome to another Smart CEO Roundtable. I am Kyra Rénel, the founder of the Smart CEO platform. I am the managing consultant and CEO of the Kyra company, and I'm excited to have you on with us tonight because, along with myself and my business partner, I can't wait to introduce you to, and it's a voice that many of you all know. We're going to have a conversation. And we're going to have a conversation about exit readiness, succession, and majority business thinking. And we are going to take absolutely all of our privilege and all of our intellect and all of our knowledge and authority, and we're going to share a great portion of that with you tonight. And the reason why I'm framing it that way is because sometimes there's a need for us as smart CEOs to really restructure the way that we think and see ourselves in business. And so, without further ado, I'm gonna get into this conversation, and we're going to take the night tonight, Kimberly and I. Kimberly Evans, I'm super excited to invite you to the platform, ma'am. And
Hey.
listen, before you say too much, let's just tell the people, you guys, this is actually Kim and I are co-founders of another entity. So there's no mistake that you've been seeing us in different spaces and connecting and supporting one another. I just want you to meet the wonderful Kimberly Evans, Kimberly Nicole Evans. Share a little bit, Kim. Tell the people who you are.
Yeah, Kimberly Nicole Evans. I am really native to Texas. I grew up in Houston, did my undergrad at Texas Southern, former military, did a great career throughout corporate for many, many years, ended up, my last stint was at JP Morgan, division lead on the corporate and investment banking side, franchise banking. And now I am living between Honolulu, Hawaii, and Houston, Texas. And I'm actually on my way to Texas. And I cannot believe I'm leaving this paradise to fly into 22 degrees, weather. But, such is life, such is life. But I'm the CEO of Seismic Transformations, as well as Beck Evans and Associates. And I am the co-founder of Rénel Evans, with my business partner and co-host here today, of course, Kyra Rénel.
Absolutely, Kimberly. It is super exciting to have you on. We have the privilege of chatting with each other on a regular basis, but we often say sometimes we need other people to hear this conversation because we really do get into it. And we have found ourselves more often than I think not over the last, 5-6 months, Kim, having a conversation about our smart CEOs and our CEOs, our leaders being ready. And so we've been in that dialogue. We've been talking about kind of what this reframe looks like when things shift and change around us, when systems change. What does that mean for us as business owners? What is it that it's exposing to us? Like before we get too deep, just think about, when we all in our own way experienced 2020, which was kind of a year of change, transformation, disaster and a culture snap, that really did happen across the US and other countries. But specifically during that time frame, a lot of us had to think differently about ourselves, our business, our careers, etc. And we did some reframing. So before we jump all the way into our topic, I just like to ask your opinion or thoughts around the idea of reframing. What are your thoughts on that?
2020 was a great moment for many people, right? It was a disastrous moment also, as you stated, for many people. But as we go through our economic cycle, every people are listening today are of all different age groups, right? They're in different stages of business. And such is just the evolution of business and life. You had individuals who went through 2020 who were coming out of a period where they were used to interest rates being rock bottom. Everything in life seemingly was going well. And then here comes this major disaster, right? That's one generation. Let's back up another generation. You had generations that went through the Great Recession. Prior to that, we still have baby boomers that are in business who have gone through the dot-com bust, and
Yeah.
those who were born, earlier in the 60s or, the 50s, they went through a lot, high interest rates. So people have seen different economies. 2020 was a big shift for those who really had not seen hard times when it came to economics and business in the US. They thought everything was great. They thought interest rates were always low. They thought the money was always flowing, so on and so forth. But 2020 was a wake-up call that anything at any moment can happen outside of your control when it comes to your business. And when you are your business and your business pays your bills, keeps your lights on and your mortgage, it's a big deal when you have to shut down, and not just shut down for a week, but shut down for months.
Yeah, that's a good point. And thank you for walking us back, right? So all of those different really points and times of inflection in our country's history. This was the one that we experienced live and in living color. You're absolutely right. And that point you just made about us being our business, when we're our business and our business is us, and this is how we live and we move and we serve our families and our communities. I think sometimes we can become a little short-sighted, and we can be a little less, we'll say, courageous around the steps we take to grow our business, because what we're doing right now is working, Kim. It's working. I'm making money. The things are moving. People are still happy. I'm able to, take care of my family, do a little extra. And then this moment comes, and then we started to hear this rumble, like, the most incredible things come when we hit a crisis. Like, the inventions and innovations come out of crisis, like all of these different things, all these different sayings and these different concepts. I kept hearing all that. And I know for me, and this is not to take us back too far down 2020 lane, but it was like after the anxiety settled down and I realized this was an opportunity for me and many others to dig in. And then I realized, Kim, and you tell me how this felt for you, because you were still on the corporate side. Small businesses are the absolute majority leader in business and economics in the US. We make the US economy go.
Yeah.
That reality was just, it, but then you saw it.
Yeah.
And you realize that if those resources had not been, let me say it differently. If we had not taken advantage of the opportunities of the resources that were available to us, and then became more curious about, if this is available, well, what else is available, kind of a concept. Yeah. Would we have really seized that moment for those that really did look at that and start to see the opportunity inside that crisis? What do you think about that?
Yeah, and again, here in 2025, one thing that all entrepreneurs have to know, and like you said, at that time in 2020, I was on the corporate side. Now I'm on the entrepreneurial side. So of course, my thinking, of course, is much more long-term. I come from a background of risk. So I'm used to dealing into my corporate planning and operational planning, the worst case scenario, right? If I can survive this, then I can build upon this. And I believe what has happened to many small businesses across the US, and let's also just be honest, several businesses did not reopen after we went down 2020, right? There was no exit, there was no succession, they just stopped. So for those of us who are now in a position to really understand that we don't control the things that are on the outside. We don't control the economy. We don't control, all of the other triggers that can affect our businesses. So that really, if anything, 2020 should have bred into the minds of entrepreneurs today, is that you must start thinking in terms of, how do I start to exit my business, create some type of scenario out of my business whereby I don't have to just hang up my shingle or walk out literally with the money I got in my account or the clothes on my back.
Yeah.
Right. Not everybody's in a position or an age to start over. And so what you have is going to be what you have. And you don't have to wait for another crisis to start planning, right?
That's
and so
right.
let's talk about the reasons why individuals who are in business now, and if you've been in business for 3 years or 15 years or 20 years, if you haven't started at least having that little nudge in your mind of when can I start to move outside of my business or create some type of liquidity event for myself before it's too late. And before we jump in, I'm just going to just start with a really quick story about a client that I had on the corporate side who had everything going, was getting ready to pass the business on to the daughter, did everything right, but something happened. This particular company was in the logistics business. Coming around the table, which no one saw, people saw it, but they really didn't factor in how it would affect them, were companies called Lyft and Uber, right?
That's right.
Uber came into the logistics side of the house, and needless to say, it had a profound effect on this business owner who had a business for over 40 years and was getting ready to pass it on to the next generation. And it ended up that this business had to fold. They did not just put out their shingle and close in one day, but the competition from Uber and Lyft was so fierce that the value of that company just 12 months earlier in the position that it was in was perhaps a third of what it was worth just 12 months earlier. So as we are looking at AI staring us down and all the advancements and how quickly things, and as you say, coming out of those years of turmoil, individuals come up with new ways of doing things. The point of it is that as a business owner, you must be able to have somewhat of a looking glass and start to imagine what could be the worst case scenario for your business, to include someone driving you out of business.
That's so good.
What would that look like?
That's so good. And I'm so glad you shared that story, because we should definitely be thinking about, what's coming. And it's not always something you can see. It's not always something you can anticipate. And you got that right, Kim. And sometimes it's an industry adjacent change. Sometimes it's something as drastic as an economic downturn or something that we can kind of anticipate, but that's a luxury, to get to that point. So the innovation in your business is always going to be important. And to kind of that point, what I want to do is, as we're talking about this next step, we think about how do we plan for moments of uncertainty that, in that moment that we were kind of facing COVID, a lot of us spent time creating like resiliency plans and contingency strategies, right? And part of that strategy and planning, which it should always be inside your strategic plan for your business. And everybody knows that I'm a nut for a strategic plan. Like, I need you to have a strategic plan. If you do not have a plan, how in the world will you measure and manage and objectively identify whether or not you're on the right path? I have no clue how you do that if you do not have a strategic plan. But in that strategic plan, as Kimberly just said, your exit strategy needs to be there. Regardless of what exit looks like for you, you need to know what exit looks like for you. You need to know where it fits on your time horizon. Go ahead.
Yeah, and even Kyra, even if you don't know, right? It should always be a thought, right?
Yeah.
Because exit readiness and exit planning people see it as almost the death of their business, right? They get very emotional. CEOs get very emotional about thinking about that. That's why so many people don't even create wills or trust or things of that nature, because they're thinking about their end, right?
Yeah, that's true.
They don't want to go there.
Yeah.
But you're sure as everyone, you and I and everyone viewing will die. At some point, you will have to exit out of your business.
Yeah.
So exit readiness really is about choice, right? It's about choice and understanding what your options are and being able to lay out those options and to get the information early so that you're not being in a position where you're forcing some type of liquidity event, which is the worst case scenario, right?
What do you say that, like, Kim, let's break that down one layer lower. When you say a liquidity event, what does that mean?
Yeah, and I shouldn't even say liquidity event, a liquidation event within your liquidity event, right? Because and we'll talk a little later about the different types of exit sales, different. But you don't want to be in a position where you're in a liquidation mode, right?
Yes.
You have to get out of the business. You're literally selling it for pennies, 1 or 2, 3 cents on the dollar, right? That's the worst case scenario. Next to getting sick, and we're going to talk about why you as a CEO, when we get into valuation, why it's so important that from an operations perspective, Kyra, that your business is able to run without you being in the business, right? And these are things that you have to work your way up to. But we're going to talk about empowering entrepreneurs to be able to have choice, and choice in the matter of how they start to strategically plan into their operations some type of event that will not require them to literally die sitting in the chair in their office, right?
Yes.
You want to be able to pass that on. So why are some owners reluctant to start this process or even the conversation, right? Many will start to say, number one, I'm too busy. I'm too busy running the business, day-to-day operations. I don't have time for this type of talk, right? The emotional discomfort around having to decide what is going to happen to the business and letting go of something that you spent years building, right? And the belief that things will work themselves out somehow miraculously. It's all, people say it's all in God's hands, right? Well, actually, it's in your hands as the owner. We know they exist, but that's not the point. That's not what we're talking about here, right? And underestimating the risk of not planning. Really underestimating that, and the perception that planning is too complex, right? Oh, my goodness, this is too much to think about. I don't have time to think about this. Well, you have people who think about it every day. Yeah. You don't have to do all of the thinking, right? There are people who can do that thinking for you.
But I think, Kim, you just identified, some of the core reasons why business owners are thinking and what they're thinking and why they don't move. And I think it's our due diligence to really reframe it. And if you identified with any of those objectives, or objections as to why you're not moving forward in your business, allow me this moment as Kim and I are having this conversation to just offer you some thoughts that you can use to reframe. I think what you should know is that avoiding the process is not a failure, but it's a signal, right? That your leadership maturity is being tested. And so I want you to really sit in that for just a second. And I see we've got some amazing business owners on with us tonight. But think about that. Anytime you start to see that challenge coming at you as a business owner, you got to deal with ego, and you've got to deal with your uncertainties. You've got to deal with the things that you've been putting off. And those things start to become, your quiet reasons why not. I'll say it like that. So let's redefine it though. So let's empower ourselves. And I'm going to give you a couple of ideas to think about as you're considering what it looks like to consider an exit, consider a transition, consider the succession, of your business. So exit planning really should be something you're starting to think about and then starting to act on about 3 to 5 years prior to when you really want to make that change. And let me give you a hack. If you think about exit on the front end when you're building your business and developing your processes, and you're thinking at some point, I either want someone to pay top dollar for my company, or I want to pass my business off to someone within my firm or my family, you will think about the way you're doing business a little sharper. You will put better processes in place. You will be more diligent about your course correcting and your money management and your revenue generation strategies. You will simply employ a better set of skills because it's not just you. And so there's something that happens in our mind. Neurologically, you're clicking into the idea that you're going to do a handoff, and you'll think about your business a little different. I'll share this story about a business that's I think they've been in business about 18 years and just extraordinary revenue. And they hit a peak during the COVID era, and then they hit that peak long enough to realize that they didn't have processes in place to sustain the peak. And when they were starting to descend and come back down and level out, the one thing that business owner said is, I wish that I had paid attention to our process issues and our gaps when we were at our revenue peak, because then I could have sustained the business at a higher trajectory.
Yeah.
Is that right? That is that simple.
And let's just add, and let's add to that, Kyra. Let's say that at that peak, someone came to that CEO and said, you guys are doing great, I want to buy you.
Yeah.
Right?
Yeah.
Right. That would be ideal. At that point, that CEO would have a decision to make, right? They can say, oh, I don't want to sell. I'm making more money than I've ever made before. But let's say that individual came back on paper with an offer that they just thought was the best offer in the world, right?
Yes.
But the question would be, at that point, you can't start talking deal because you have no clue how much your company is actually worth.
No.
That number that person could be writing on that paper could be millions of dollars short of what your company is actually worth.
Well, so, Kim, most business owners, let me just say that they live in the space of what it feels like.
Yeah.
A lot of business owners live in the what it feels like zone, which is super risky. Yep. Okay. I'm back to you. That's really risky.
But that process is not a single event. And that's, we all watch the Hollywood movies. The movie is only going to last an hour and 15 minutes, unless it's Marvel. It's going to be 3.5 hours, right? But most movies are hour and 15 minutes, hour 20 minutes. So you just see the offer. They meet for dinner. Somebody writes a number on a napkin, passes it to the person, and they're happy. And they walk out. Next thing you know, you see them, hanging out on the beach or somewhere, right? Enjoying life. It doesn't. It rarely happens that way in real life. The real process involves multiple steps, involves a lot of due diligence. And a lot of that due diligence comes with, as you stated before, Kyra, understanding, having that operational side in place, right? Mm-hmm. So that you're able to put your hands on the information that you need. But exit planning should start 3 to 5 years out. For any CEO, right? 3 to 5 years out. If you even had that thought of, man, I cannot do this forever. That's when you need to start planning, right?
That's right.
And succession is not about just getting out. It's about continuity of value, because you have to be able to also look through it through the lens of the buyer, not through the lens of you as the seller, right?
Yes.
Because they're not buying you. They're buying a process. They're buying something that can continue after you're gone. And it's up to you as the seller to be able to prove through the numbers and all of the due diligence that business can survive without you being there.
And if you hold it right there, when you think about that, they're buying the business through their lens as the buyer. You're not you, not the seller. So that means they're not emotional about the transaction as like you may be. They're not beholden to the people, the structure, or the client base like you may be. What they are looking for, like you said, Kim, are strong processes, strong client systems, strong service models, things that they can buy that they don't have to create or construct because it's already inside your business. And that is an essential. And so, not to dig too deep in on that operational function, but that operations is core processes, policies, flows, workflows, tools, systems. Being able to just hand off the actual assets to that buyer is really important. Or that business owner or that member or that employee that you're going through the succession process with. There is nothing like, and I have been behind quite a few succession transformations, and there's nothing like knowing that CEO is worried about the impact of the transition, whether it's a family member, right? Or it's a stranger on the street. They're worried about the impact, right? Here's when, that closet that everybody has somewhere, or that drawer in the kitchen that's got stuff that doesn't belong in it, or is too full. Everybody's got that drawer. I feel like I opened that drawer. I'm like, who put this in this drawer, right? And it just ends up being the secret. And that secret's going to come out. And business owners that are not prepared, or even if they're very prepared, that drawer still exists. Something's in there and they know it's going to be revealed. The concern is what will be the impact when it's revealed. And I'm not talking about major, ethical issues. I'm talking about basic fundamentals. I didn't take the time to develop my people. I didn't take the time to understand our cash flow models. I didn't take the time to understand our strategy for client acquisition. It was all in my head. It's not written down. I got
and
that's
not unusual, right? I mean,
yes.
we're all about real talk. I'm all about real talk. That's not unusual with privately held businesses. It's actually more usual than not.
That's right.
Much of the business, you can say business secrets or business know-how is still in the mind of the owner.
Yeah.
And these are things that are not for someone to actually fix, but speaking directly to that CEO and speaking directly to that business owner, it still comes with this question.
Mm-hmm.
If you had to sell your business tomorrow, if you had to sell it tomorrow, if you just had to get out of it tomorrow, what would you ask for it? And how can you validate that your asking price is actually valid? Not only your asking price is valid, that the market is going to be willing to pay what it is that you're asking, right?
That's so good.
No differently than selling a house. You look at some houses, and if you are in a position, which is why we say start thinking about this 3 to 5 years out, because what you think may only take a few months, we know in business that everything takes longer than what we have anticipated actually take. And it is not a single transaction. There is just a ton of due diligence that has to be on the front end. And why is that important? No differently than selling your home. You would not sell your home for less than what the market has proven that it's worth, right? And even from your realtor's perspective, they're not just pulling numbers out of the air. They're bringing comps to you. They're telling you that the house across the street sold for this and the one up the block sold for this.
Yeah.
So your business is comparable. It is comparable to other businesses that are in the exact industry that you are in. And you are, like you said, you're in your business and your head is down and you thinking that you killing the game, right? But when the buyer starts to do their due diligence, they're not comparing your business to how you think it's doing. They are going to, it's the story of two fools, right? FOOLS. There's either going to be two fools in a transaction, or there's going to be no fools in the transaction, right?
Mm-hmm.
It's going to be none or two, because why is that? Because someone is going to do the due diligence.
That's right.
Either on the seller side or the buyer side. And it's typically going to be on the buyer side, right? Yeah. And the buyer is going to carve your numbers apart. They're going to take the business. They're going to take you out of it. They're going to remove you from the business, and they're going to start to look at it. And if that business operationally, and the numbers don't lie, and what you do not want to have happen is have the buyer discover things about your business and your numbers that you were not aware of. And they start going through this process of discounting. You thinking you're going to get 10, and by the time they finish picking your business apart, they're down to 3 and can justify it. And you didn't do any of your due diligence on your side to understand how the buyer sees the transaction, not the emotion, right? Business owners have a tendency to want to tell you how they spent years and 80 hours a week building their business and all of the things that, they'll show you their hands, whatever that they have going to show you how much stress business. The buyer doesn't care how much stress you had building that business.
But I can tell you, Kim,
stories.
No, exactly. Though, but so here's the other side of it, you all. And here's the beauty of having, I think Kimberly and I in this conversation together, because what she just landed on was perfect. You take those stories and you turn that into a narrative that you package up to package and market the business. That's what we do with those stories. We package that as a part of your deal. But the actual assets, the truth about your operations, all of that, that narrative needs to be supportive of that. So we need to make sure that you've thought through all of your operational systems and tools. And that means sometimes you need an external voice or view. And if you have an advisory board, if you have a consulting team, if you have a colleague that has a rich business sense, that you can tap into, do that. But I can tell you, we decided this was a great conversation tonight to have because, one, it's the work we do, but number two, the goal for us in this community is to create an excuse-proof environment for entrepreneurs to thrive. If we are the majority in terms of small businesses, of the businesses in this world, like 90-some% of the businesses are categorized as small, I need you to understand how much economic power you have and how impactful an efficient and accurately run firm can bring to the market when you have that level of confidence. Yeah. When you have that level of confidence. So let's talk about, Kim, let's talk about really how important early planning is and how it creates leverage, because that, I think, is the key to being able to have no fools at the table, so that you've done your due diligence and you want that buyer to do theirs. Because it's kind of like, listen, it's kind of like walking in with your, 879 credit score and throwing your briefcase on the table and saying, go get that, and this, and let me know when you're done. I'll be ready. It's kind of like that level of confidence.
Yeah. When either you're passing, even when you're passing the company on, let's say a scenario where you're passing the company on to employees, right?
Yes.
It is still a negotiation. Yeah. Whether you are being bought out by private equity, it is still a negotiation, right? And while you're going through that process, it's important to be able to pull back the curtain. You as the owner have to be able to pull back that curtain. Because often what happens, Kyra, is that the owner thinks that they have an 871 credit score and they really have a 550, right? Mm-hmm. Or they have a 600.
I didn't know y'all were going to use that system. Oh, they're different. There are different scores for different persons.
They're different. There's a different scoring system for businesses. It goes back to that comparable notes. And if you are not in the top tier of your peers, or if you're falling in the middle, or you're in the lower range, and those statistics are out there. There's sales. You're not in some industry that no one has ever heard of. There is a database of companies that have been sold that fall into your NACEs, and individuals who are doing their due diligence will know whether you fall in the top, bottom, or the middle tier, and accordingly, they will make offers for that. But I also want to add to that, Kyra, that many individuals also have put themselves in positions whereby they don't understand that they could be immediately or automatically discounted before they even get to the table.
Yes.
And it's one of the things that I've mentioned before, and we're not going to, spend all evening on it. But when you have situations such as high concentrations of clients, unless it's justifiable, you're in a very unique field and there's only 2 or 3 businesses that do what you do. Individuals that have what we call, minority certifications fall into that category. And it's really, really important to be able to understand where the buyer could start discounting your potential asking price. And that's important, because if you need $7 million to retire comfortably, and somehow, some way you're discounted all the way down to 3 or 2.5, that's a $4 to $4.5 million gap that has been taken away from what you thought you were going to go to the table with. Right. So that is why it is so critically important to understand this process from the beginning and be able to have a team that can do the due diligence for you on the front end, so that you can have that confidence when you get to the table to know where you fall and where your negotiations to start.
I would agree. And I think powerfully agree, authoritatively agree. And if we understood just how much of a majority we were, right, as a business, as an entity in the grand scheme, and I'm gonna keep saying it, you guys, we're the economic engine of the US, period. And as we continue to expand and go global, just watch the footprint, as they say, follow the money. And so understand that as a viable business, it's your due diligence now to start capital stacking and start looking at how you build your capital assets so that you have resources to grow, to evolve, to acquire certain support systems, or even to make a purchase of your own and increase the entire profitability and value of your business, so that when you're ready for your event, you not only have the capital, the credit, and the client base, can get my words out, but you also have now a broader spectrum and volume. You can offer more services, more solutions, because you've been able to acquire a company and fold them into your entity and increase the value of the services. So there's so many ways to get there, but it is important for us to be thoughtful about how. And so, and here's where small businesses really can flex that status that they have as being strong, efficient, operationally, sound. That's where you flex it. Make a plan to grow. As you're making that plan to grow, make a plan to acquire more capital. Make a plan to consider non-traditional capital opportunities. Make a plan to consider traditional. And think about stacking different types of capital so you're not so lean. So if we don't want you, or I should say, if it's not best practice to have a high concentration in one client type, right? Then we definitely know it's not the best practice to have one type of capital in your business. You need some diversification so that you can have the ability and flexibility to maneuver transactions. You can manage terms differently. You can manage short, immediate and quick buys. You can manage your capital expenses differently. And you can start to increase the quality and value of your business overall. And as a firm, you can then flex that really your revenue and buying power and create more opportunities for your clients. You can take on more innovation opportunities, purchase more technology. There's so much that happens when you start to create those second and third tiers of supporting your business. There's the daily operations, but now there's the ability to stack different layers of capital. And then you have the ability to add new and or other service lines or new businesses and fold them into your firm so you can increase your capacity. You don't always, or collaborate, do JVs, whatever that looks like. But those opportunities exist, and they start to create more choices for you as you move down the path. And I think that, Kim, is where we want to be as our valuation increases.
Yeah, what you're talking about, Kyra, is just having a healthy balance sheet, right? You want to have a healthy balance sheet. And when you talk about capital, that's my thing. But when we look at capital structuring, again, a buyer or even a succession planning, you're passing the company on to your employees. No one wants to take on a company that is darn near insolvent, right? At the time of acquisition. Talk about a deep discount scenario. You don't have any cash on the books because everything is razor thin. Margins are razor thin for contracts. Just as you stated, you haven't built out multiple revenue streams. All of these things lead into the due diligence that is going to be done on your business. And if your business is barely making it from month to month, right? You don't have, you haven't built up that cash flow or that capital that again allows you to make acquisitions of your own as you're going through your business and the process. And you're not able to do research and development to develop new processes or products or other streams that have higher margins. You have to be able to create room in your business. Again, what is the attraction of the buyer? It's not always just top line revenue. If you are making 16 million a month, but yet your overall margins and expenses, as I start to get down to, pre-tax cash flow or EBITDA, you're negative or breaking even week after week because you haven't built in all of the planning that comes to actually growing your business. And that's, again, goes all the way back to the original question that you asked, Kyra, which is, when we're looking at a business, what is your plan for the business? You can't be in it forever. When you and I created our joint partnership, that was one of the first things that we laid on the table. And it's not something that we just preach, we practice it. Yeah. We had sat there and decided, when did we want to be out of this business? Because we knew it wasn't going to be something that we're going to be running for the rest of our lives. And from that decision that we made as around when we were going to be potentially planning an exit, we started strategizing around customers, operations, all of the things that go into building and creating a business that can run efficiently without us, to be able to create that value proposition, right, for a future scenario. And those things are important. And with that, right, understanding investments, understanding the capital that may have to go into creating that type of business, but really bringing this back and landing that plane with privately held companies, which is the majority of small businesses in the US are privately held. They're not publicly traded on some type of stock market, right? They're privately held. So being that you are privately held, there are so many things that go into, again, understanding how do you start to create that conversation around how do I exit my business and how do I start to build in the value now, given that I have some number in mind that I want to reach. And where do you think you are right now? That's always a great place to start, which, those are services and questions that we can answer for people. What is your company worth today? Right? What is it worth today?
And Kim, I think when we bring it and boil it down, it is about our mindset, Kim. Mm-hmm. Because, how you think a thing, right? How you think, so it becomes. And so I think that is where we start. If you are thinking small, if you're not thinking broad or long term or with your end in mind, we can have in phase 1, in phase 2, in phase 3. We can start and stop as many different entities or businesses or phases of our lives as we want based on our plan. Like, we don't have this, the Kyra company doesn't have to be the only thing, right? I have other entities or other things that bring me joy. But how are we thinking? And I think the one thing that I love for business owners to really start to adopt right in this moment is understanding that, as you said, privately held companies are the majority of our economic stream. If that is the case, you should be thinking like a majority partner, a majority member. You are a majority when it comes to bringing your business to the to the industry, to industries, and to your customer, the consumer market. You are a majority provider. And so if you think about that, there's an army of small businesses or privately held businesses behind you. What would it look like if you started to think about the fact that your business is critically pivotal to the success of the other businesses running behind you? It's critically pivotal. You do your part, they get to do their part. You open this door, they get to go into this door. And thus and so the cycle continues. Yeah, I just want us to adopt another mindset around the fact that we are majority business. We generate the majority of the capital, and then we need to work smarter so that we have a longer stay that is successful and profitable, so that we can have these successful exit strategies in place, and we can succeed our business to others successfully.
Yeah, and it doesn't have to be that you are growing, as they say, long in the tooth, right? That you're getting older.
What does that mean, Kim? Don't do that to us. What in the world does that mean? Long
you're getting older. One of the areas that also within, especially minority-owned businesses, woman-owned businesses, should really start thinking also as exit and succession as a means of creating more. And people don't look at it that way. When you are able to start a business at a certain level, grow it up to a certain point, and sell that business at a price point that is adequate for you, that doesn't mean that you have to stop. if it's a windfall of money, you can then take those funds and go and create the next business or the next thing without having to go out there and look for investors and borrow money and all of these things to restart. That's another way I want us to really start to understand what is entrepreneurship for. Oftentimes people think entrepreneurship is for replacing your income from a corporate position or replacing some income so that you can, live a comfortable life. Entrepreneurship has no cap to it. It is a world of potential and possibilities. And we really have to start thinking and participating at it in a level where it goes beyond just one single business. The greatest entrepreneurs out there have multiple businesses. Heck, I have three. I have three businesses
in record time.
Because I don't think in terms of getting back to mindset. To me, entrepreneurship is just like any other asset. You want to be able to take that asset. Most people don't have one stock. You haven't taken your money and put it into one stock, or you don't have one mutual fund. It's the same with entrepreneurship. It is a mindset. And I think I love the story of Mael. And for those of the African-American business, African-American hair care, and the owner, who was a registered nurse at the time, went into that business. And I love when she tells her story. She went into the business with the mindset that she would sell it one day and create generational wealth for her and her family. And she built the company based upon the end in mind. And of course, they sold it for lots and lots of money. And now she has the opportunity to take that wealth and go out and invest in other businesses, create family offices, our foundation, create other businesses. Entrepreneurship is a tool that we have to understand is used to create other things.
I agree. And I think a lot of business owners, especially in our generation, became business owners out of necessity. And because of that, we didn't even get into the luxury of thinking about business in a more dynamic way. And so now there is this clarion call for us to think about, Gen Z's like, hey, y'all are too one-sided. Figure it out. We don't like the way you all think. You're too narrow. And so for those of us that are disrupted by Gen Z, good for you, because we've been given a pass and access to think a little more broadly. And I say that tongue in cheek, but I love the fact that generations come behind us and disrupt us. And so then we get to create a better path. We're the one with greater resources. Well, some of us, right? Because Gen Zs are killing it in the game, but that's because they're thinking so multilingual, so to speak, in terms of how they're approaching the business. And so I love that you said that. But because a lot of business owners generationally have entered into the space out of necessity, or they were the heirs of a business and they're, operating a family company, it is absolutely okay. And I'm going to give everyone permission. It is absolutely okay to think a new thought, to consider a new way, and to grow your mindset so that you can expand, gain access to new information, learn and glean from those that are doing it in a different way. It is okay. It's
okay. And entrepreneurship is an ecosystem.
Yes.
And I want also, as entrepreneurs, for us to understand our contribution to that ecosystem. As you create multiple paths of wealth, much of what is happening, we have the baby boomers who are selling businesses and exiting out of corporate in record numbers. In the next 10 years, you're talking about trillions of dollars that will be passed on through the sale of or the succession of some asset.
Yeah.
And these are
privately tsunami.
Yeah, the silver tsunami. These are privately held businesses that are changing hands. And you have to ask yourself, as communities, where do you fall within that ecosystem of entrepreneurship? It is not about saying that capital is not available. It is about understanding how the capital was created in the first place. Yeah. And the capital was created through the continual sale of some asset that appreciated over time, right? And so we have to think in the same way. Yeah. And this entrepreneurial decision, because it's a decision that most of us make,
Oh, yeah.
is not going to wait for anyone to catch up to it. It's not going to wait. It has never waited since the founding of this nation. It has never waited. And so you have to be able to truly make a decision and understand, are you going to be able to get out of the time that you spent in your business some amount of appreciation? Because if you're not putting money aside, if you're not investing, if you know you haven't done the things that you needed to be doing with pensions and all of these things that you can do for yourself as a business owner, something has to give. And what is going to give is either you are going to be able to have what you want and need, or you're going to be, again, a victim of the changing winds of entrepreneurship in this nation. We are at another crossroad, a huge crossroad when it comes to the exchanging of wealth in this nation. And where are you going to be? Are you going to be in a position to be a buyer? Are you going to sell? You don't want to be like that client that I mentioned earlier who waited so long and technology caught up to them and they weren't able to get out of that business what they thought they were going to get out of it. But the whole point of the conversation today is planning and not being behind the curtain and thinking that you have time. You may have time, but what's even better is understanding what you have now and potentially how you can grow that so that you could be in a position to have options. Do I sell now or do I wait? Do I wait, take a risk? What does that look like? But the whole point of preparation is to be able to have options.
That's good. And I was going to say, when you said that, do I have time? And I'm going to say, do you have time for what specifically? Because that's how we should be thinking. Do I have time? Time is infinite. Do I have time for this or that? Or do I have time for these 3 objectives? Or do I have time for these 2 objectives? Because one of the things that we've all learned is that innovation is always present. And technology is not slowing down for anybody. I'll tell you all this quick story. I was at a conference in the fall of this year, and I had probably about less than an evening, essentially, to myself. And so I'm in DC. I'm at this conference. I decide in sheer Kyra fashion to go get her nails done, right? Find a nail salon in the city with a nail tech that you don't know. That's a whole nother story. We won't go there. That's risk. Okay. I'm an entrepreneur. I take risks. So I go find this salon and I decide I want to walk back to my hotel. I've realized that's probably about, 30 minutes. I'm going to walk back. When I was walking back, I did something that I had not had a chance to do. And I literally took in 30, maybe 45 minutes worth of learning around innovation and technology, specifically AI. And I learned about so many tools on my walk back because I wanted to have dedicated time to educate myself. And why did I tell that story? Because entrepreneurship is about invention and reinvention and alignment and being creative and being a risk taker. And so when you think about where your gaps are, I had to be honest enough with myself to say, sis, you have a gap in the area of technology and innovation when it comes to AI. How can you leverage time? And so do I have time to get my nails done? I know this is so simple. Or do I have time to take this class? I had time for both. And you know what? It was about being innovative. So I took the road, I took the foot traffic, approach to this thing. I decided to foot it back to the hotel and not take a car back because I wanted time to just think. And I wanted to be able to listen. So it gave me a dedicated space and time. And I use that example because we all are making decisions about, this or that. What do you have time for? Because you don't necessarily have time, to go start over, as Kim was saying, but maybe you have time to start today to create, better systems. And we're seeing that, I told a story earlier about a company that was on their ascension and they wish they had stopped then to course correct so they could continue that path. Well, they've done that. They've got their, gone through the process of process development, et cetera. And now not only are they ascending back, but they're able to now look at their areas of strength and add new service lines. And so maybe the way that they get back to that peak is through new service lines and not necessarily just that same trajectory. It did expose their opportunity to expand their portfolio. So there's always another way. There's always another way. And I want to leave you with that. But think about time and think about, do I have time for what specifically? Because time, do you have time? And saying yes is a very dangerous answer. Do you have time for what specifically? That's what you need to be answering. And so, Kim, good. This has been a good conversation. And I know that we are both very diligent across our platforms to make sure that business owners and our audiences have quality insights and information. You all are seeing this, which means you know how to find us. So continue to get closer and dig in as you're learning more about this process. And if you're curious, about preparing yourself and becoming more ready, whether you're going to sell your business, you just want to have a strategy for closing, maybe one service line and moving into something new, whatever that is. I want you to be thoughtful, and you can obviously contact Kimberly and I and get a little closer to the work that we're doing. I know we both have links everywhere for you to click and make an appointment. So we don't have to go down that pathway. That's just inherent. We're business owners. We make the sales process really simple for those that want to do business. But I do want, I want to pause for just a second, Kim. And I want to say, as we're thinking about this, this conversation is really the beginning of intentional preparation for the business owners that we're talking to. And so this is our call to you to stand up and think more strategically about your approach. And so, Kim, what are some of, I guess, kind of the final thoughts that you want to leave with these business owners that are catching this conversation that we're having, that will help them continue on this journey to really improve the quality of the work they're doing every day?
Yeah, I would just say that you are responsible for the value of your business through your actions and how you grow your business and your creativity around your business. As you are doing this work and investing your time and your effort, do not leave it to chance. That is a big risk. That's equivalent to what I would call taking all of the money that you have to Vegas and putting it on the poker table with one bet. Do not take it to chance that you are going to get out of this endeavor that you call entrepreneurship what you think you are going to get out of it. That is no way to think about what you're doing in business. Start thinking more strategically and responsibly as a CEO, and know your numbers. Know what your company is worth today. Know what you can be doing now to build in that value. If I told you that I had $20 million waiting for you on the other end in 12 months, but you had to do this, and this to get there, people would be jumping through hoops, Kyra, to make that happen. But on the other end is a question mark. It's not a guaranteed payout. So what are you willing to do now to start filling in that middle piece so that you have a better idea of what it is that you can create and get out of your business in terms of having some type of liquidity event at the end and not leave it to chance?
Yeah. It's you, whether you call that retirement or you call that your investment opportunity, Kim. I think you nailed it in terms of what's next. We're not leaving it to chance, smart CEOs. This platform was designed to give you access to information, to resources. And I'm going to tell you now, I spend a lot of time curating my relationships, my collaborative partnerships. Do we not, Kim? We invest and we go all the way because we understand the value of having great thinkers and thought leaders around us. And when we come into the space as smart CEOs, as leaders of industry, we are indeed investing not only in ourselves, but we're investing in you. And so this time we've given to today, we really want you to think long and hard about what's available to you. We've got some great thought leaders on with us tonight that I've seen in the feed, and I'm excited that you're there with us. We got leaders in industry. So just as the silver tsunami is happening and many people are exiting, and it's calling a huge amount of attention to that same thing is happening in major corporations, in industries, the turn of talent is happening, right? And so that is a transfer of knowledge and wealth and insight. And a lot of the infrastructure, a lot of the tribal knowledge is what I call it. It is moving. And so if you are just as blessed as I am to have a business partner like Kimberly that decided to retire herself early and then jump into the wild, wild west over here in this entrepreneur space again, good for you. I know that I'm blessed to have Kimberly as a business partner. And, but I will say that it is important for you to be thoughtful about your future. And so just as we said tonight, I hope you listen to this a couple of times, save it, pin it, share it, because smart CEOs, the journey that we're on, we, as I say, we may walk by ourselves, but we don't take this journey by ourselves. We do not take this journey alone. And we are not going to win alone. We're going to win together. And we're going to start tonight by making better decisions, better choices, and locking in into the space and the mindset of a smart CEO. Tonight's your night. We'll talk to you soon. I am Kyra Rénel, my beautiful guest and co-host and business partner and collaborator. She's just cracking up. You know why? Because she's sitting on an ocean. That's why. We're going to deal with that later. Kimberly Nicole Evans, it's been great working with you tonight.
Thank you, Kyra.
It's been a pleasure. All right, till next time, smart CEOs. We'll see you soon. Have a great one.
Bye-bye.